Hello, Anna. I have been looking very much forward to our conversation today, and it is a great honor for me to have you in my podcasts as a very important noise from the LATAM region, and actually the first person that I'm going to speak to from the LATAM region.
Oh, hi, Chris. Very nice and glad to be here and coming back to Stanton Chase premises after
Yeah, you
long,
have been with us a couple of years ago.
several years ago, more than a
Yeah,
decade, but
yeah.
very nice 4 years.
And you did very interesting things in between. I'm going to say a bit about yourself, but first I'm going to introduce the title that we're going to speak about today. So it will be License to Operate or Growth Engine, the real ESG game in Latin America. And now a few words about you, Anna. You bring a unique combination of perspectives as a board advisor, investor, and one of the leading voices on ESG transformation in Latin America. Over the past decade, you've been at the forefront of shaping how companies in the region think about sustainability, not as a side topic, but as a core element of risk management and value creation. You've led ESG advisory across LATAM at SLR Consulting, working with leading companies in industries such as mining, energy, and finance, and helping them navigate increasingly complex regulatory and market expectations. Before that, you were instrumental in building and scaling the corporate citizenship practice in Latin America, bringing together global expertise with local market realities and embedding a much more strategic, financially grounded view of sustainability in the region. And importantly, you also bring a strong governance lens through your board roles and advisory work, helping leadership teams translate ESG into real decision making at the highest level. What makes your perspective particularly relevant is your deep understanding of how global standards like IFRS S1 and S2 interact with very different realities across Latin America. So, Anna, Latin America is a complex region. A lot has been happening. When I take a look at it from a European perspective, it's, let's say, not so much that we usually hear about LATAM. It's a bit different in my personal case because we have a quite strong presence at Standard Chase in Latin America. And I do have several colleagues that have been working on sustainability related topics, especially in Chile. Let's start with my first question. How would you evaluate the sustainability journey of LATAM companies over the last years?
Well, it has been an amazing journey, to be close to the story about Latin American companies and their sustainability path. And I could say it's a story of real but very uneven progress,
Yeah.
but that today has a growing momentum, but that still persists with very structural gaps. So there's a lot of a lot of work to do.
Yeah.
Um, what I've seen, like the most notable shift according to this year's, it's basically the why the companies engage with sustainability.
Mhm.
Being on the first years, I'm saying 15 years ago, basically seeing sustainability as a checkbox, exercise, a PR or a communications
Yeah.
tool, to show the world you were doing the correct things.
Mm.
While today things are becoming much more serious, and the last
Yeah.
2 years between 2024 and 2026, everything has become more measurable, and more impactful on the financials of companies with proof. So it's a
Mhm.
very different game that was the starting point of this,
Yeah.
which, working on sustainability was quite a challenge. You were knocking the doors of companies and people thought that you were really, selling communications, and
Yeah.
basically that was not the case. Um, However, there's a lot to do, and that's why I was telling about this uneven progress, because there's still a lot of companies and countries that are lagging on this development.
Yeah.
We still see different Latin Americas if you spot the different countries,
Sure.
and within the more relevant countries on the game, you still see a lot of companies that still do not engage either with reporting, with strategy. To name a recent study, There is an ESG landscape survey done by RMS, which is showing that 82% of companies in the region are considering advancing on ESG practices as
Mhm.
strategic and relevant for the future of their companies.
Okay, I
And the
know.
corporate governance, dimension has increased by 55% as a strategic priority.
Mhm.
So there is momentum, and basically the reasons for that momentum have to do with several factors.
Mhm.
One of them is the regulatory momentum
Yeah.
because governments are creating accountability frameworks which previously did not exist, and that they're aligned with international and the most demanding international standards, like IFRS or ISBB. And Brazil, Chile, and Mexico are leading that way, and today all these norms are basically live in Brazil, in Chile as from 2027, in Mexico also uh, since 2024. And these three countries that are leading the way account for 60% of the region. So
Yeah.
things will be moving. They are moving, as well as sustainable finance, which is growing, at a very fast pace
Mhm.
on the recent years.
Mhm.
Uh, Numbers today account for billions of money on green bonds and sustainability linked loans. And it's projected to expand from 200 billion in 2024 to 980 billion by
Wow,
2033.
that's a heavy
So
increase.
yeah.
Yeah.
So the point I want to make, is that there is strong signals of things moving, especially because of the mandatory requirements, because of the lower cost of capital that sustainable finance is bringing, and because of
Mhm.
the relevance of the region, towards basically helping the world committing to the objectives of 2050 regarding carbon
I'm
net zero.
unusual. Mhm. Yeah.
Yeah.
Okay. Extremely interesting. When we now take a look at a CEO or investor perspective, where is real enterprise value being created through sustainability in LATAM right now? What do you see?
Well, we may see very concrete areas where sustainability is generating value, and we were
Hmm.
speaking about that. And basically, one of them is sustainable finance.
Yeah.
That brings in lower cost of capital. Sustainable finance lowers your borrowing cost basically because it makes you less risky, attracts more lenders, and open doors to cheaper funding.
Hmm.
Um, the company that can demonstrate credentials is out of this financial market, and doors are closed entirely. And this is a very attractive market where, for example, Chile was one of the first ones to take advantage of it as with a sovereign born bond on 219. It was the first green bond in the Americas, which was, by putting a a green label on its debt, attract the twice number of buyers that what they needed, brought in 64 new accounts, primarily European, and paid the lowest interest rate in history as a result.
Yeah.
Uruguay, Mexico, Colombia, they've all taken advantage of this kind of instruments, financial
Hmm.
instruments. This has gone also to the corporate level, and you may also see Enel Chile, Enel Americas, Surazo in Brazil, CMPC in Chile, Coca-Cola, FEMSA in Mexico. Those are examples of companies taking advantage of this market. So that's a
Hmm.
very interesting, and appealing reason for engaging on ESG.
Yeah.
Um, if you go on to renewable energies, of course,
Hmm.
they bring in structural cost advantages.
Hmm.
They're definite about reducing OPEX. And, um, you know, this an example of a company moving on this opportunity, for example, is Enel Chile, which is committed to 100 renewable generation fleet by 2040, and they are going to finance it just using sustainability links instruments to finance
Yeah.
this position.
Hmm.
So any initiative or any company belonging to the energy sector, which is thinking on renewables, which basically all of them are doing because of their portfolio diversifications, should think about the sustainable loans and the sustainable market in order to achieve cheaper financing and
Yeah.
foster, this products.
Mm.
We also have critical minerals in Latin America,
Yeah.
and there's the term used, the green premium.
Mm.
uh, we hold the 60% of the lithium's reserves and roughly 46 of world's copper, both critical minerals necessary for decarbonization. So
Mm.
that's a structural advantage to accelerate, energy transition. And if you don't have ESG credentials, you just cannot operate in this sector.
Yeah.
We also have agribusiness. You may think about Brazil, the Amazonas, and there, there is a concept about nature value chains.
Mm.
Uh, the export markets in the EU and also in Asia are tightening deforestation-linked regulations.
Yeah.
Uh, Indeed, the EU deforestation regulation creates a very hard frontiers for companies that comply from the ones that don't.
Yeah.
And basically, you will not be able to enter the market with products such as beef, soy, cocoa, coffee, timber,
Yeah.
leather if you don't comply with them.
I can
So,
tell you, Anna, we have a lot of discussion ongoing in Europe on this and also in Germany when it comes to what does that really help the Amazon forest, for example. And it's really a serious issue, but go ahead.
I'm happy to hear that, because
Yeah,
basically you are the ones that may foster this. At the end, is the
absolutely.
end consumers, the
Yeah.
ones that really say, I don't want a product that it's really damaging the Amazon. The consumer drive is very relevant here. So I'm happy you don't want to buy products that are hurting our Amazonas. Um, and then also you've got infrastructure and private equity, where also the last year was very intense in deals like the one of Brookfield, that closed, energy transition fund for 20 billion, that has 61 billion of asset manager tied to South America. That's showing an institutional appetite for the region's infrastructure assets, which is
Yeah.
something that also we are in desperate need, of more infrastructure, more ports, more roads, and the financing for that is also linked to ESG. So I think those 5 drivers already explain, why it is a no-brainer,
Yeah.
to engage and be part, of this economic dynamics that are coming through on the following years.
Makes a lot of sense. And we can only encourage people to take this serious and think out of the box and with a more creative mind. And where do we find relevant value streams for our companies and for the future? Next, I will take a look with you on regulation as a strategic lever. I mean, we also had this. It is important in many parts of the world, and also, let's say, to get the topic accelerating. When we look at IFRS S1 and S2 gaining traction, what will separate companies that merely comply from those that use reporting as a strategic asset?
Well, in general, no one likes so much regulation,
Oh,
especially if you're a company and you have to start complying with a lot of
yeah,
data and being transparent about your information. But there is a very economic logic behind that, and basically what IFRS S1 and S2 does is that it bridges, the financial effects of a company with their sustainability reporting. So they're intrinsically linked. So then the investors are having very useful data in order to compare across markets and sectors with this common language.
mhm,
And that is something unique, because ESG has been a place very crowded with different standards, which has
yeah,
been something that has annoyed companies. And now, aligning this to financials and, having a relevant part of the world aligning to it, it makes you really make worth the work that it means. And also, so here comes like the decision of companies of I have to do the work, I have to comply with the law, of course. Now, do I do it just on a very defensive way, or maybe I assume that I have to do this and then I make the best of it and I get it strategic?
Yeah.
And and my recommendation is that I would go for a strategic view because it has tools inside the IFRS that are relevant for companies. For
Yeah.
example, under demand for materiality, you can,
Mhm.
that is a risk assessment. And when you're able to really get deep on your company and really understand what is going to impact you financially in terms of risk, you're really doing the job of understanding your company and looking up for opportunities.
Yeah.
So when you as a reader or as an investor see that the company leadership understand the vectors that really affect the cash flow, you really feel keen on investing probably on a company.
Mhm. Mhm.
It's a very exercise, to do it more than on a defensive way, to do it on the right issues and spend the time on analyzing the right issues and getting strategy from them.
Yeah.
The same happens with the scenario analysis, which you may do the scenario analysis once a year for the report and then put it on your desk, or maybe
Mhm.
do the scenario analysis and use them for capex evaluations, use them for, I don't know, pricing carbon, doing carbon price assumptions,
Yeah.
for doing M&As. You can use it for so many things, especially in industries that have assets 20, 40 years of
Mhm.
life.
Mhm.
Uh, and that are capital intensive.
Yeah.
The data as well, you may decide to do on a spreadsheet and, continue doing things, manually and defensively, or you can integrate basically your ESG data to the same level as your financial data and use it on real time for getting strategic information that basically can be useful every day and for different areas of the company. And then finally, regarding governance, um, the normative basically fosters you to really establish a way of governing, ESG so that it really gets to a management level and to a board level and fits with the strategy. So that is also something welcome because it guides you through this. So um, the outputs of IFRS and having, as I mentioned before, 60% of the region's GDP through Mexico, Brazil, and also Chilean companies involved in this. It's an opportunity, to have fully comparable investor grade LATAM disclosures and compare them. And that
Yeah.
is something, it's a
Mhm.
visibility that you didn't have. And that
Yeah.
definitely will create a gap between leaguers and laggards.
Yeah.
But I think it's a way forward.
Mhm. It just what you're just saying reminds me a bit about what has been, let's say, happening here in Germany, but also in other parts of Europe when it comes to control accounting versus controlling. So in the past we separated this quite heavily. Now it's been, let's say, merged a bit more, but still accounting is the one being focused externally, right? And controlling where you use that data that you have accumulated and do take management decisions based on it. So there's probably, I would say, a very high overlap to what we can see with sustainability related data. You can only use it for reporting or you can use it for managing the company. And that's what makes, of course, a lot more sense and pays off more for the organization. You cannot manage what you have not measured, right?
No, and now with AI also, you can do so many things with the information,
Yeah,
You can really get insights that before you paid for them while you have them
yeah,
inside you.
yeah,
All this data is valuable. So I think that I understand sometimes when I hear, CEOs or management or board saying, "Oh, I have to do all this work. I want to concentrate on my business. I want."
yeah,
I did things before and it was fine. We've always done things well. But the thing is that now markets are much more complex,
Mm-hmm.
and uncertainty and turbulence are so frequent that you really need to start creating
Yeah,
resilience on your
yeah,
business, and you need this kind of tools. It's
yeah,
it's it's the way to survive at the end, and
yeah.
in that sense, the regulator, I think it's pointing to the right direction.
Yeah, that is true. But we see here at the moment is, let's say, renewable energy as an aspect where we have the very high energy costs at the moment because of the war situation in Iran. I mean, the ones that have invested in renewable energy on their plants or with PPAs, for example, they are the ones that are benefiting now from stable energy costs compared to the ones that are still relying heavily on fossil fuels. Just as an example, then it's not just a reporting issue; it's a hard commercial topic. Huh?
No, and it's the same as people with cars. I don't know
Yeah,
if any of your friends that have an electric vehicle
maybe.
are laughing. Well, you do. Well, here you may see people that really are not. Of course, they're not enjoying. But they're
No,
already getting benefits.
yeah,
Of being leaders.
definitely.
And this is something that has been announced.
Yeah,
So individuals already feel this kind of things. Large
yeah,
companies, should have the appropriate view and strategic view to also spot this kind
yeah.
of risks.
Very good. Next question from a governance standpoint, Anna, what role should non-executive directors play in ensuring ESG is embedded into core strategy, not just oversight?
A very relevant one, definitely. Um, when sustainability comes uh, top down rather than bottom up, is definitely more effective.
Yeah.
That's a fact.
Mm,
And there are change coming here, because when ESG used to be a side topic, a corporate sustainability report, a PR exercise, and a non-executive director just watched this being published and moved
mm,
on. But that model doesn't work anymore. If we consider ESG a core value driver, a financing lever, and a regulatory obligation simultaneously, you
yeah,
have to take this on the core of your business. So like the traditional mode of a director, of independence through distance, and basically I want to spot this from distance, has the challenge that you can't govern something that you don't understand. So that may become a liability if you don't
yeah.
understand it. So there is a need of more involvement, because these are complex issues, and
Mhm.
you need to. It's not that you cannot learn it, but you have to get involved. So what I observed from an enormous amount of conversations with senior leaders in LATAM is that the board in most LATAM companies is not driving the question. They're not driving the right questions on
Mhm.
how ESG becomes a competitive advantage, how its consequences relate to investment, or how it connects with the strategy. And I think
Yeah.
that is something pending to move forward as well.
Mhm.
Um, if if, for example, you would think of an ideal non-executive director ESG role, you would probably desire them being more involved in strategy setting, and more than an approval exercise, go to co-creation or co-authorship, or a
Yeah.
more close supervision, because you need to be there when it is shaped.
Mhm.
Um, you need to do the questions about the needs on capital allocation and consider sustainable finance within all the instruments that you are already using for financing your company.
Mhm.
And you should also put some, incentives, real and serious incentives to the senior management team,
Yeah.
and then cascading them downwards toward achieving these targets, because
Yeah.
they are strategic. Um, that's what I may say. And all these things have several challenges in Latin America,
Yeah.
especially because there is a family sometimes concentration on boards, because we still are lacking several ESG board committees involved within the largest governance structure. And basically because director development on ESG is nascent.
Mm.
Um, an ESG director development is still new.
Yeah.
Some boards don't want to have an ESG director. They're
Mm.
afraid of it.
Yeah.
So I think there is some kind of literacy needed in the region in order
Yeah.
to, start seeing the opportunity and the need of this because of the reasons told before:
Definitely.
regulation, access to capital markets, and opportunity to export markets.
Yeah. It's definitely more needed than just knowing what E, S, and G stand for, but having a, let's say, good grasp of the overall um, strategic impact of the whole thing for the organization for the years to come in a very changing and volatile environment that we are currently acting in, right? Good.
Yeah,
Now let's
sometimes
take a look. Hmm?
sometimes I feel board members, or some more old school board members think that by bringing an ESG director formed on ESG rather than an opportunity, it's um, like bringing an environmental activist inside the board,
Yeah.
and not the case. These
Yeah.
are things you have to be aware of, and the sooner you are aware, you will be able to start moving your business towards the rules of the game.
Absolutely. I will now shift to supply chains. And when we take a look at which ESG requirements from multinationals will effectively reshape entire supplier ecosystems in LATAM, what do you think about this?
Well, there is. I think that yes, that ESG requirements will reshape the ESG, the supplier ecosystems in
Yeah.
Latin America, of which we are providers of a lot of raw materials.
Mhm.
This will probably be unevenly, and that's not the good news. And it will
Mhm.
also be slow, and it will also have a risk of exclusion rather than transformation of many suppliers. You know. Um, it's hopefully it will be a nice story, and I think that most of the products will get on board, but definitely there will be winners and losers on this,
Yeah.
because with the regulatory mandates, we spoke already about the EU deforestation regulations that
Yeah.
require businesses to demonstrate that products, imported coffee, cocoa, oil, palm, rubber, soy, timber, were not
Mhm.
produced on deforested
Mhm.
land. Already is on place, and markets are opened or closed depending of the compliance to this.
Yeah.
And um, in other sense also, multinationals are also, by independent of the regulation, they are also big multinationals: Apple, Walmart, Unilever, Volkswagen. They are also establishing a traceability of their supply chains,
Mhm.
and they audit it and they follow it. So also markets are open or closed regarding depending on the compliance, to certain practices.
Yeah.
um, and finally, again, the regulation IFRS requires the disclosure of scope 3 emissions, that it's all your
Mhm.
value chain.
Yeah.
And if you're a supplier that you're not able to meet the obligations of supply chain, you won't be in the game as well.
Yeah.
So this creates pressure, an incentive for buyers to co-invest in supplier data infrastructure.
Mhm.
So again, here is a decision for big companies, and it's either they work to transform or to exclude your value chain.
Yeah.
Because we know the reality of value chains. I know the ones here in Latin America, and you cannot demand a small cocoa producer probably to do or comply with a standard, that
Yeah.
it's complicated, complex. You kill their business.
Mhm.
Um, so there is the role of large companies in cascading good practices, engaging, and really working to create a value chain that is reliable, that creates long-term relations, that
Mhm.
develops with their business.
Mhm.
And there are nice case studies there. I was remembering Walmart that does that with small entrepreneurs.
Mm-hmm.
a golden ticket, price they give to small entrepreneurs that comply with that have good new products, and that they're able to comply and to raise their standards, and they are sold, in all the shops of Walmart. Um, so that's the choice they have to make. You can
Mm-hmm.
say to all small producers, sorry, I will not buy to you. I'll go to
Yep.
market and find someone else that is able to do it. Or you engage with them.
Yeah.
Probably the reality will be both scenarios. And we hope the most is the large companies taking the role of parenting
Yeah.
their supply chain and basically choosing and developing these smaller suppliers.
Mm-hmm. To build on what you just said, Anna, can you share examples where companies have won or lost business or financing due to ESG performance?
Uh, well, I want to. There are very relevant cases in Latin America. I wanted to touch on the case, a very known case, probably the one of Vale in Brazil,
Mm-hmm.
um, which shows, the cost of an ESG failure and then a nice story of rebuilding.
Mm-hmm.
Vale is the world's largest iron ore producer.
Mm-hmm.
Um, Listed in the New York Stock Exchange, it has a revenue of 38 billion, and the story contains both, as I was mentioning, the cost of failure on ESG practices, and then, the payoff, recovering from these bad practices and implementing, a very innovative approach
Mm-hmm.
on the same decade.
Yeah.
So after the Brumadinho disaster in 2019 that cost 270 lives, a terrible tragedy,
Yeah.
the SEC sued Vale, alleging that the company manipulated their dam safety audits and misled investors regarding fraudulent ESG disclosures.
Yeah.
Um, so this implied that Vale was traded with a 13% discount. It is traded at a 13% discount since 2019. Imagine the amount of billions that have been destroyed in
Yeah.
enterprise value because
Yeah.
of that. Well, but fortunately, Vale did not disappear because they could have disappeared. A company may
Mm-hmm.
go bankrupt after
Sure.
some kind of issue like this. Or
Too big to
uh,
fail, probably.
sorry.
Too big to fail, probably.
Well, yes, but you can see companies like, for example, Carillion in England that failed, and
Yeah.
they had the largest contracts with contractors and the government in the UK, and they failed. They didn't
Yeah.
save them. So Bali saved itself, and basically what they did, that they invested an enormous amount of money in decarbonization initiatives since 2020. They
Mm-hmm.
became and they became the first Brazilian company to prepare its sustainability report in accordance to IFRS before the norm was
Mm-hmm.
dictated by
Mm-hmm.
government. That was on a voluntary basis.
Yeah.
2 years ahead of the regulator had mandate. So then they were able to attract Saudi Arabia's public investment fund to attract a 10% of their stake. Also, engine number one, the activist ESG focused US investment firm took another 3% of the stake. And basically that gave the funding and the financing of the company to start recovery. Vale today continues to sell 46% of its copper to Europe. So it was worth the saving. Um, but why this case is instructive despite the tragedy is basically because they had to fail on ESG practices before
Mm-hmm.
they master it. Today,
Yeah.
they are released as a very good practitioner and basically um, a learning case,
Mm-hmm.
of what can be the catastrophic cost of really don't understanding that ESG is about risks, it's about responsibility with your business, and it's about, you know, the long-term view of your revenue. Because these are things that do not have an impact on 1 year,
Yeah.
you know, these are things that may last decades. Um, we were speaking about supply chain, for example. There are studies
Mhm.
from McKinsey that show that every 4 years you have you have some kind of issue. All companies have some kind of brokerage of your supply chain,
Mhm.
and spotting the risks that are coming over maybe could make that you have every 10 years some kind of issue in your value chain that
Yeah.
disrupt your business, and that basically impacts the revenue for 10 years.
Mhm.
It's not easy to recover from these things.
Yeah.
Valley was able to do it within a decade,
Yeah.
um, but the effects are still being felt. The
Do you
discounts
know
still
if that
persist.
happened because of a change in the top management?
Um, I'm not sure. For sure, the top management must have changed. What I
Yeah.
know is that
Mhm.
today Vale has the most reputed ESG non-executive directors of the region.
Mhm. Okay. Excellent.
If you want to find really prepared ESG
Yeah.
board directors in Latin America, 3 of them are in Vale.
Yeah.
So I don't know about the management change. I do
Mhm.
know that their board was extremely serious about it,
Mhm.
and they brought in the best people of the market.
As you said, it has to start from the top, or at least the top does not cannot be against it. So
Yeah.
uh, when we now focus on, let's say, short-term cost increases or um, the money that you need to invest probably into changing your business model or the way how you do your business. How should CEOs approach this trade-off between short-term cost increases in the supply chain versus long-term resilience and market access?
Well, I think this is a question that comes on the desk of a CEO every day. You know, you're
Yeah.
always making this kind of decisions, but I think you could reframe, you know, that question, because rather than saying, "Can we afford ESG investment?" I think
Mhm.
you should ask, "What happens if we don't invest?"
Mhm. Yeah.
And basically, can we structure it so that, you know, the early wins may pay for the rest? Because
Yeah.
um, there are ways of dealing with this, and this was what I was telling you about the breakdowns and the McKinsey study, that supply chain breakdowns, serious herd business happen every 4 years
Mhm.
and can wipe out nearly half of a year's profit over a decade. So when you look at it that way, the cost of ESG investment seems small on that comparison.
Mhm.
So um, you shouldn't think of basically cutting every cost, neither to go and protect your business against everything, you know, and become paranoid about, you
Yeah.
know, have all risks. But you have to deal with the uncertainty and choose your
Mhm.
battles, but
Mhm.
basically strengthen your resilience, and invest smartly and in the right order, you
Yeah.
know. So there are costs that you should assume now, um, and basically do not treat sustainability as a pure expense,
Mhm.
but really um, look at the investment that have a measurable return,
Yeah.
go for the early wins, and
Mhm.
probably uh, take insurance and take action against the highest risks that are coming on the long term.
Yeah. It reminds me of a search that we had end of last year. We were assigned a VP Sustainability Management for a big German medium-sized family-run company. And their view on this was, okay, we want this person also to create um, cost cuts, for example, and also revenue increases with sustainability initiatives. but the money that the person saves or additionally gains for the company can be invested into other sustainability initiatives. So that would be from my side a wise thing to do, not just saving money with it, but probably also taking a closer look at where are other parts that would also make sense to invest in a specific topic, and then maybe have a return on investment over a medium or long-term perspective, but increasing the resilience of the organization as we just had it.
That's a perfect strategy.
Yeah,
That's a very clever strategy,
yeah,
and very much on the framework and in the framework logic that this was telling.
yeah.
Uh,
So, Anna, for our conversation today, I would do a stop here and give our audience an outlook. We're going to have a second part of our conversation in which we're going to discuss about climate and circular economy as value drivers. Second, as regional divergence and strategy for LATAM, and then a leadership perspective and forward outlook. So it was really a pleasure for me speaking with you today, and we're going to continue this on a very short notice. So thanks a lot for this great insight into the LATAM region as a start, but definitely audience, please stay with us and listen to the second part of our conversation.
Thank you, Christian. Very glad to speak to you today.
Thank you, Anna.